a couple of minutes here before we go to today's agenda. So Vertti and Minea, please.
Yes. So hello everyone. We are Vertti and Minea. I'm a fourth-year student of finance in Aalto, but now currently mostly working at the corporate finance boutique. And Minea, if you could say a couple of words of you.
Yeah, hi everyone. I'm also a board member at Aalto Finance with Vertti, and I'm a second-year student, as many of you are as well, which is why I'm also participating in this course. But now I'm here on a different matter.
Yeah, so the reason we are here today is our financial markets and institutions after exam next week, Friday at 19 o'clock. And Minea, if you could continue with this agenda based on this next slide. One of the roles of financial institutions is to provide liquidity. So Minea, please go ahead.
Yeah, so well, as Vertti said, we all warmly welcome you to join our after exams next Friday. You might have noticed already from our Facebook event or from the WhatsApp group, but yeah, so you will be able to enjoy free beverages from the open bar, which could be a nice incentive for you to come. But then you will also have the opportunity to meet with Nordea representatives and perhaps discuss about how this course can be utilized in your work life, or then just otherwise network with Nordea and then Aalto Finance and other students.
Yes, thanks. So here's the fact sheet. So after exam with Nordea, next week, Friday at 19 o'clock, Teatteriklubi is the venue. Please come from Pohjois-Esplanadin side. We will provide you with the Narekka cloakroom. And the first 10 students will receive a small surprise from us, so please come early. And we will present some awards based on the case group presentation. Was it Vesa? Yes, I think so. And also the investment management students of last autumn will also be awarded. And more information can be obtained from our Facebook event, which I think you will find by searching this event on Facebook. So here you can see our whole board. We have some more beautiful and even some handsome guys at the board. So do you have any questions about this event? Yes. If not, then I thank you. I thank Minea. I thank Vesa. And see you next Friday.
Okay, see you then, Vertti. Thanks for this. Now, as we are talking about kind of the after, sorry. I only can do one thing at a time. Okay, there we go. Okay, now as thank you, Minea, thank you, Vertti, as you were talking about kind of after exam, kind of a evening event. So that means that we are about to finalize this course. This is the last time that we meet kind of online. The exam will be then next week's Friday. I will explain that kind of how that will be structured at the end of today's lecture. So wrap up. When we started, you might recall that on the very first lecture, I suggested that the objectives of this course would be that after this course, after these lectures, after preparing for the exam, after finalizing the casework, the term paper, you would have a feeling that you understand the basic workings of commercial banks, central banks, investment banks, different funds, mutual funds, ETFs, hedge funds, private equity funds, venture capital funds, insurance companies, life and non-life insurance companies, and have some picture about financial innovations, and especially how rapid the development has been over the recent, say, 10, 15 years. And after all this, you would have a feeling that this is the reason why the market is structured as it is currently. And especially in the light of the financial crisis, as we have learned, 2007, we learned that until that, surprisingly little was put emphasis on different incentives of various the institutions in markets. And as we learned that actually institutions really matter. And we learned that we can't go on the way that we had been operating until 2007 in the US and in Europe. So we need to require more capital from banks, put more skin in the game from bank shareholders. We want more, better prepared for, say, liquidity needs, better reporting, supervising. The importance of supervising was kind of learned the hard way, and not only kind of on a national level, but we also learned that we need that on a, say, especially in Europe, on a European level. So we learned that regulation is needed, and regulation need to be tougher to avoid situation that the world was structured before 2007, which was that heads are green, tails you lose from banks' point of view. So taxpayers and politicians say that no longer we accept these kind of rules, so we want them to be more balanced. And I hope that after this course you will have a feeling that you can read and comprehend, understand banks' annual reports and the articles of Financial Times. So whenever there's a story, there is more or less on a daily basis something that has to do with, say, what would it be? Capital requirements of banks, Solvency II, why some insurance companies are selling assets as a result of tightening capital requirements as a result of Solvency II. Very recently, there was a news that we had that it had been found out that maybe maybe this Solvency II went too far, so they are taking a few steps back to allow insurance companies' ability to take more risks. To understand why, what is the background, why we are doing it the way that we are doing it currently. IRBA models, solvency kind of regulation for banks, Basel IV, further kind of strengthening, you could say that kind of first the capital requirements were strengthened, or the bar was set a bit higher, but now these IRBA models allowed banks to use their own internal models. Another question is that did we go too far on loosening these regulations? So to understand these articles, what is the background? I hope that you have a feeling kind of after this course that you understand these stories. This is not a mathematical course per se, but the most important is to understand the arguments, the structure, the stance why regulator has did has done what it has done, why they have done these, executed these, say, stress tests, first stress tests, second, third, fourth in Europe. We didn't discuss about American stress tests, but for us, it's mostly kind of to understand the European framework. In US, just the stress tests are pretty much the same, just the parameters are slightly different. Okay, on the very first lecture, we looked at kind of the size of the market. Why study financial markets? First argument was that this is a huge market, kind of in terms of balance sheets and assets that these institutions manage. Many times the global GDP, there's about hundreds of trillions of dollars and euros. So that's one reason. The other reason is that financial intermediaries do play a very important role in our everyday life. So it's not that what happens in Wall Street stays in Wall Street. No, it's kind of what happens in Wall Street or say in financial markets has direct consequences on real markets on the main street as well. And then we recognize that we need this fix. We need to fix the parameters, the environment, the requirements for financial institutions. That is something that we recognized also in the light of the movie Inside Job. Any questions from this lecture set number 2? Or should we go forward? Okay, the next topic was this financial crisis, and even though it's already, say, 15 years ago, it's relevant, it matters. We took a look at some reasons why this crisis, why we ended up in this crisis, and we especially discussed about various ways that we have solved it. In a way, we have solved it pretty nicely, pretty well, but something that is clearly observable in today's markets, at least 2 things. First, as I mentioned, the regulation of banks, that is what it is currently, is a result of what we went through in 2007-8. The second thing is that pretty big role in this market was played by the central banks. And ever since 2007, central banks started the massive quantitative easing rounds, first, second, third, in the US, the same in Europe. And that actually worked, but it led to central banks holding massive amounts of different assets, government bonds, mortgage-backed securities, corporate bonds. And then we faced COVID crisis, and all this development kind of accelerated. So we are where we are currently in an area that we have never experienced before. So that's why it's so important. Everybody's so interested in hearing what is the direction that Fed and ECB are telling us, kind of in their when the chairman of Fed or ECB is having in a press release. So kind of any piece of information is so valuable because central banks have become massive holders of different types of assets, and this has never experienced before. Any questions on lecture set number 3? If that's clear, so then we had one lecture on how to fix the banking system in Europe, we discussed about the different stress tests. As I mentioned at some point, it's not important to put that much emphasis on various parameters, just to understand that these parameters have changed over the years. The first stress tests were supposed to be kind of enough, but then very kind of quickly we recognized that, I would call it a joke, but it was kind of it was not enough clearly. So then we needed up kind of, we recognized that we need a major revision in the whole setting in Europe. We need European Central Bank to take the responsibility of supervising the big banks. That was the one pillar of the European Banking Union. The second pillar is about the resolution mechanism. Those are up and running. And then the third pillar, which is a common deposit guarantee system on a European-wide level, that is still pending. So that's where we are in 2022. And also we looked at kind of a European Capital Markets Union, some background, some steps. The basic idea is that we recognized, we say, thanks to the banking crisis in Europe, that the whole market has been all these tens of years has been very, very bank-centric. And as long as banks have been doing relatively well, so we have been happy. Not recognizing that there's a major risk, kind of systemic risk, that if banks fail or face major difficulties, so that has a direct consequence on the main street, so that on the real industries and for any household in Europe. Plus, banks in nature are not risk takers. They lend money and they expect that the customers pay the loans back. Unlike in US, where a relatively big proportion of the investments are made via venture capital funds, private equity funds. So that is market-based funding, so which leads to a culture where risk-taking is more appreciated. And we recognize we need something like this in Europe, and that is what European Capital Markets Union is supposed to be the solution. It's also still in the making. It's not finalized yet. So it's in the process of kind of developing. Any questions on lecture set number 4? If not, so then we had one lecture on commercial banking, and especially the key focus was on banks' balance sheets, something that Mikko all preferred, that banks typically have pretty small proportion of their assets as equity. And why is that? So that is that banks. That is because banks' equity ratios are calculated differently than for say any other companies, industrial companies. For banks, risk-weighted assets are calculated, and the way that these are calculated has also varied, has developed over the years, and that is something that we also took a look at. And then IRBA models, it's already mentioned, bank specific. Some big banks have had a ability to ask for a permission from the financial supervision to use their own developed models instead of the standard models. So to understand why banks' balances look different than industrial companies, so that was the key. And central banks, who are in the driver's seat currently in the US and Europe, we could say everywhere. So we looked at kind of a central bank's various goals, Fed having this dual mandate, ECB having all the price stability as the goal, which makes kind of it's pretty standard or pretty big kind of a difference. The term paper had to do with something very recent, which is a the green financing, and that is something that I took on purpose, because it's very recent kind of that central banks here and there, as you were able to see, have taken, in addition to price stability and say employment as their goals. And we also discuss about the very unusual, just seems to be continuing year after year, kind of the environment for banks, which is really challenging, especially for the banks which are kind of focusing on the traditional banking, which is borrowing and lending. So negative interest rates have put them in a very difficult position, especially because that is the case in Europe. So this is where we are, and to understand how we ended up here, and how central banks, what is the way out. So that is what we are all very excited to hear. There are no easy ways out, but kind of obviously central banks must have some ideas how to get back to the, say, close to the normal. So it cannot be that the deposit rates of banks is negative forever. Regulation was something that kind of I don't know how exciting that is as a topic, but it's very important to know, because regulation matters, and the regulation, as I found, kind of I found the Inside Job movies kind of great. It's entertaining, it's funny, but we learn a lot as well. And one feature of that is kind of it very nicely explains how in the US since early 1980s the common theme was this deregulation, and then the whole thinking changed in financial crisis, and we started re-regulation, and this re-regulation is kind of the era that we have been living for the past, say, 15 years. Shadow banking, the term that Eugene Wu kind of said that he somehow doesn't like, because it's somehow shady, but it's obviously not. It's not shady. It's kind of essentially anything beyond traditional kind of on-balance sheet banking operations that financial institutions do. So banks also have, like Actio, they also have a mutual fund business. They also have a life insurance business, which is kind of shadow banking in a broad term. We discuss about mutual funds, the massive market which has grown over the years, and ETF market kind of has been growing very recently. Hedge funds, venture capital, private equity funds, and we discuss about kind of the role of investment banks in certain advisory operations. Financial innovations is a bit kind of a tricky of a topic, because it could be tackled in so many ways. What I tried to kind of emphasize was that obviously any innovation is by nature, it's supposed to be good, as long as it is kind of based on demand. What happened, it went a bit too far, you could say, in the early 2000s when very complex structures were developed. So where the risk was kind of not understood by customers. They were kind of pretty opaque in structure. So the market learned that the investors learned kind of, you would say, the hard way that, okay, it might have financial innovation, but a couple of steps kind of too far. We discuss about something specific in a fintech area, which is peer-to-peer lending, which is at the heart of banking, which is kind of traditionally considered to be kind of that banks only can borrow money and lend money. Now, thanks to the technology, totally new kind of companies have been able to penetrate to the market and launch services without any bank's balance sheet, but using just kind of a technology as a platform and have a place, the marketplace where lenders and borrowers can meet. It was considered to be kind of a very easy business to grow, but then we learned through a couple of cases, especially at the Lending Club, that actually it is not that easy to use technology only. So in the banking business, there are certain rules that kind of you need to kind of understand. So it could be that the expectations were slightly too optimistic concerning kind of say peer-to-peer and other offerings as well. And it might be that these two different markets, kind of say traditional banking and these fintech markets, there's some merger kind of going. So kind of traditional banks are kind of they are learning also about this. They are acquiring these fintech companies, and fintech companies, as we learned, the Lending Club acquired a bank and utilized that kind of the ability to finance operations through deposits. And then last topic was insurance companies, the basics, agency programs in the insurance, how insurance companies tackle those. We discussed about the solvency issues, Solvency II kind of issues, kind of a new. It took many years kind of adopt that kind of it's matching regulation in a way for insurance company what Basel was for banks. And then the last topic was kind of the pensions, the risk being that we might live longer than kind of than we work. So we need to prepare for our retirement years. Any questions concerning any of these topics? Anything you'd like to clarify or share experiences or anything? Everything clear? Okay, if so let's move on to the next step, and that is the only thing which is left. Essentially, you are kind of clearly you have done your case work 30%, that term paper 20%, so that makes 50% of the course is already kind of executed. And then next one is kind of to prepare for the exam, which will be, the first one will be on next week's Friday. And it will be, as I already kind of mentioned, once it will be fully online. And how it will be done is that I will download these exam questions. Exam questions will be, setup will be, it will be 5 questions, brief questions, 6 points each, not more than 150 words per question to answer. So that makes 30 points. And then there's one essay of 20 points, not more than 450 words. So this makes 50 points, 50% of the total grade. It will be kind of the first exam will be on next week Friday at 9 o'clock sharp. And the second exam then will be April 25th. The structure is the same in both exams. So there's no difference. If you can't make it next Friday, so you can make it kind of next week's Friday, so then you can take it on April 25th. So, and the structure is the same. 2 hour kind of exam. I will put the questions at 9 a.m. exactly on my courses. I will open there an exam section, and like you have already returned your term paper and case reports. So return your answers within 2 hours. So that is on Friday by 11, and the second exam will be, it will start at 4 o'clock. So that will be returns. The answers will be returned on this assignment section within 2 hours. Is this clear? That's a chat question. Could you give us some examples? So this is something, first of all, I have never done this kind of an online exam. It's obviously kind of, you have all the material kind of available. And you have Google available as well. You have everything available. So obviously kind of, it would be pretty, how would I say it, pretty boring if I ask something directly from, say, the course slides. So if I say, if the question was that, explain what IRBA model is, so that would be kind of a copy-paste answer from the material. So that wouldn't work. It would be kind of this would be pretty boring as a question. So I aim to be somewhat, what should I say, creative. So the questions they are based on the material only that we have covered, the topics only that we have covered, but they're slightly applied. So if you understand, if you have read the material, if you have attended the classes, if you have, say, seen the Inside Job movie, so my idea is that it would be relatively easy, not relatively easy to pass the course. Well, the minimum is that to pass the course is that you get 25 out of 50. So I'm not aiming to make a difficult exam. So that would be also kind of beyond the purpose of the course. But the questions they are applied based on the topics, based on the themes, based on the material that we have discussed. Remember also there is this the set of the reading list, Aktia's interim report plus 3 articles which are on top of the material that we have covered on this course. So that is kind of and how I aim to structure the course question is that first the threshold is that okay, what would be kind of fair requirement to pass the course? While obviously its grading is very simple, 50 to 59 is grade is 1 and so on. So how to get 25 should not be too difficult. I know you have already kind of worked somewhat a lot with the term paper case report, but they are group works. This is individual. So to pass the course should be kind of not that difficult. That's the first threshold. The second threshold is that how to get 80 or 90. So not trying to make kind of super difficult questions, but kind of to get 90. So that means kind of as a grade 5, that would require kind of somewhat exceptional kind of a knowledge, because if everybody gets 5, so that would be pretty boring as well. But kind of to pass the course, that would be kind of relatively easy. That is what I think. That is what I plan making these questions, and that is also obviously something that I consider when kind of grading the exams. Is everything clear? So this is the way to go. I hope you all do well in the exam, obviously kind of as well as possible. And I hope also technology, everything will work kind of that I think this is the most risk-free kind of mechanism, as I understood that some my courses kind of structured questions have some difficulty. So this would be technically also kind of the least risky. Do you know when I do not know, but kind of what I know that case reports I have done currently, I have read, should I say 70% of them. So I will be done by, okay, at least say mid next week. So that will be the case reports. The term papers, obviously kind of I try to create them as soon as possible, but kind of I don't promise anything so that I wouldn't fail my promises. But I'll do that kind of as soon as possible. Kind of personally, I have kind of allocated time once, obviously, the exam questions I will receive by 11 next week's Friday. So I start grading them immediately. So kind of so that is my more or less kind of a priority to grade them. So, but I don't promise you any kind of but obviously it will take 4 weeks. Kind of I try to make all these kind of, you would have to all the grades, exam, term paper, and case within the next, say, 2 weeks from next week's Friday. So that would be in 3 weeks from now. That is my goal, my personal goal. But if I can't do it, so kind of that is, I don't promise it. I promise that I try to do that. Anything else? Everything good? So technology is not my kind of a core competence. So if it happens that next week's Friday something goes wrong, you can't open your computer or my courses or whatever. So I will be on my computer. So I guess the easiest would be that kind of you will send me email. I hope that everything should work smoothly. But if it just in case, as it's pretty kind of a unusual setting as we can't see each other, if something goes wrong, so kind of just send me email. So then we'll see kind of how we will settle kind of the issue. So kind of but I have pretty good kind of feeling that everything goes kind of pretty smoothly. And I look forward to kind of receiving your answers and kind of start grading them. And then next week's Friday in the evening, it's kind of a time to, I don't know, celebrate the end of the course. So you don't need to see me anymore. If you join Teatteri, I will be there kind of, but you don't need to come to talk to me if you don't like, but you're warmly welcome to talk to me if you like. Good, everything good. Thank you for kind of your patience and kind of some activity kind of on this, at least to me, very unusual kind of circumstances, doing all this kind of online. Never done this before myself, but it has worked kind of at least technically relatively well. No tricks, nothing, kind of everything kind of plain and simple, but kind of at least so far it has worked. So I wish you still kind of have some energy to kind of take another look at the material, read the articles, and kind of prepare for the next week's Friday, the exam. See you then. Cheers.